Hey, what's up, everybody? Welcome to the weekly outlook for Nasdaq today. So I'm doing a pre-markup analysis. As you guys know, that Mondays I typically don't trade on Mondays, but what I like to do is do a analysis for the week, just to see where price could be going and what price has done so far. All right. So right now we have Nasdaq on the 15-minute time frame. And from my analysis on Friday, all right, if you guys remember what we said, that where price was, we had a fair value gap where we wanted price to essentially tap in, and look at this, it tapped in beautifully into this fair value gap, right? But again, whenever we trade, we look for multiple reasons of confluence, all right? Multiple reasons to enter a trade. Now, for me personally, this tap into the fair value gap wasn't necessarily enough reasoning for us to enter this trade, right? And if you guys did enter this trade on Friday, you guys would essentially have the perfect entry. But in terms of distance, price only went from 19,992 and it peaked at 20,109, all right, which is obviously still a great move. But the only way that you would really benefit off this trade is if you had to hold your trade over the weekend, right? And as mentioned from last week, our targets were last week's 1.618, which we can see where price is most likely heading to, as well as, yes, 1.618, all right, which was Thursday's 1.618 zone. And we can see on market open today, being the 12th of May on Monday, we hit that, all right, we hit that. But I personally can't say that I had a W on this trade. I can't say that this was a winning trade for me because I did not enter on that fulfillment of a fair value gap, and also I didn't hold the trade over the weekend, right? But it's just nice to see that, look, the system obviously does work. Even if you are scalping, day trading, or swing trading, right? Our targets get hit, all right? Our targets get hit, which is amazing. So just like every single Sunday/Monday, I like to do an analysis on the week just to give you guys an outlook for what I'm looking for on Nasdaq. All right. Typically, I would do analysis on Bitcoin, Nasdaq, and gold. In this particular stream, I'm just going to focus on Nasdaq, and then from tomorrow, I'll be looking at gold and Bitcoin. All right. So we can see our fair value gap got tapped. So we can remove that, all right? We can remove that. And remember that our horizontal rays over here, or our purple rectangles, all right, was our previous head and shoulders pattern, all right? Our previous head and shoulders pattern. But for now, this isn't necessarily a head and shoulders pattern anymore. We're just using this as a form of support and resistance. All right, so we're going to keep these here for now. We will update them throughout the week, but we will keep these zones for now and probably fine tune them. All right, fine tune them so that they match up nicely for a support and resistance zone. All right, so again, because it's Monday, all right, we can't necessarily work with yes GZ, right, which is our yesterday golden zone. That's why I typically like for a new week, we let Monday do its thing. Let's see the direction for the start of the week, and then there afterwards we have our data to move forward. All right, but prior to us doing a prediction based on the data we have, let's see how the previous week closed and the previous day, all right, being Friday. So let's wait for this chart, reset chart, and then boom. All right. So last week essentially closed in a spinning top. All right. A spinning top. So if the market didn't necessarily open in such a bullish manner, all right, our prediction would be short. All right. Because that could lead up to a nice evening star Japanese candlestick. So the evening star Japanese candlestick would essentially be, let's find our highlighter. So it'd essentially be this. All right, let's actually start fresh. So it would essentially be a candlestick that would be long like that, and then so that would be the bullish candlestick, and then this would be the spinning top. All right, and then this the new week, which would be this week, we ideally would want it to come at least 50% of the previous bullish candle, all right, 50%, and not surpass the high, all right, because the moment it surpasses that high, that evening star candlestick is invalid. All right, now again, how we do Japanese candlesticks is I like to trade them prematurely. All right, but thankfully we aren't trading this prematurely because it already broke up above. All right, it already broke up above, so that means that our evening star Japanese candlestick is invalid. All right, which means that our bias is bullish. Okay, but because price opened bullish, remember we have a lot of imbalance in price over here. All right, we have a bunch of imbalance in price that we do need price to fall. All right, so that is the evening Japanese candlestick. But again, because we closed, well, we opened up higher and price already broke that last week's high. Okay, we are no longer looking for bearish moves. Okay, so last week we have a bearish candle, and this week already surpassed the high of last week. Okay, now let's look at the days. Okay, so now each candlestick represents a day. So same thing, we have kind of been having a mixture of days last week. All right, we would have bullish, bearish, bullish, bearish, bearish, bullish, bullish, bearish. All right, but what we can see on the daily time frame, we have a ascending trend line. All right, so price has been following this bullish trend line since the 7th of April. All right, so let's put our joins back. All right, our joins are back. And let's label last week's high and last week's low, okay? Because remember that every single time when we start in a new week, we need to identify the previous week's high and the previous week's low. All right, so let's go back to this. Let's remove that for now, and let's remove our 1.618. All right, so last week's high over here, all right, and last week's low at the bottom over here. All right, so a low of 19,601 and a high of 20,264. All right, now remember, we are going to draw our Fibonacci based off our bias. All right, so what is our bias now? Our bias is essentially bullish because of how price opened up. All right, so we'll have our last week golden zone, which is over here. All right, as well as labeling our last week high and last week low. Now, I want you guys to take a careful look at this last week golden zone, all right, and how important it is going to be for the rest of the week moving forward. All right, why it's important is because remember our golden zone is made up of our 0.5 and 0.618 Fibonacci levels. All right, 0.5 and 0.618 Fibonacci levels. So because we have an imbalance in price from last week, all right, because price opened up higher up, our golden zone would be a perfect area for that fulfillment of the imbalance of price as well as our golden zone. All right, so we need to keep that in mind. Now, not only do we label our golden zone and the highs and lows of last week, but we also need to label our 1.618. All right, so our 1.618. Let's just do that for now. So last week. All right, so now what we can see here, right? Typically, when we identify our 1.618 zone, all right, price hasn't necessarily hit that yet, all right? And the reason why price has surpassed our 1.618 zone already is because of what's been happening in the market, right? And what I always say to you guys is technical analysis is very, very important. But look, if you are going to lock in with a pair, all right, if you're going to lock in with a pair and actually understand what moves the pair and certain events that occurs, all right, you need to know what happens fundamentally as well. All right. Now, lucky for you guys, I have the article already loaded. All right. So the reason why prices open above last week's high and the reason why the market has opened up higher, as well as already surpassing last week's high, is because of the US and China trade standoff. All right. So because of this positive data, all right, on the tariffs with China and the United States, the market has opened up higher. All right. So on TradingView, you guys can probably see a lot of articles on what happens fundamentally with that pair, but maybe do some research and look at, like, for example, Yahoo Finance, MarketWatch. There's a bunch of news articles available, and just actually understand what this means. All right, understand what this means and what to look out for moving forward. All right. So we've identified our 1.618. Now, in situations like this, right, where prices surpassed the 1.618, I would also like to identify the 2.618. All right. So remember, 0.618 or 0.618 zones are typically reversal zones. All right. When you factor in Fibonacci levels. Now, because we've already surpassed the first one, and it's only Monday, it would be best to identify the 2.618 for a possible reversal area, right? So because price hasn't necessarily reversed in this key level over here, we can have a look for 21,330, which is our second 0.618 zone. All right, so that is the week done. All right, now we look at the daily time frame. And like we said, all right, we had a daily ascending trend over here, right? Now, previously, it was identified as a 4-hour trend, all right, because prior to it forming into a daily trend, all right, it was a 4-hour trend. Now, the question is, do we adjust the trend line? All right, do we adjust the 4-hour trend line to match, the lows of this ascending trend? Or do we keep it the same? All right. Now, what I would say to answer a situation like that is, when you go down to the smaller time frames, all right, is price still respecting that trend? So, for example, once price comes into that trend zone, is it still respecting it? All right. So this ascending trend, all right, we can see that although it's a daily, all right, and it, doesn't necessarily match the exact bottom of this point over here, price has still been respecting this trend pretty perfectly, to be very honest, right? So we are going to stick with where the trend line's at, all right? And the only adjustments that we are going to make is trend lines on smaller time frames, all right? Trend lines on smaller time frames. So over here, we can see from the last week low being Wednesday, all right? We have a start of another ascending trend, all right? Something like this, okay? Something like that. Now, I always like to label my trends on what time frames I found them. All right, so this would be 15-minute trend, obviously ascending. Now, just purely based off what you see in the chart right now, all right? We're on the, sorry, this is not a 15-minute trend, this is a 1-hour trend. Now, based off what you guys see, all right, price is trading above the daily / 4-hour trend, all right, which has been respected quite tremendously, all right. Price is trading above last week's high. Price has surpassed last week's 1.618 zone, all right. And price is also trading above the 50-day, and 200-day moving average, as well as last week's golden zone, all right. So we are definitely right now in a bullish week, an extremely bullish week, right? So the main plays would be long positions, all right? We are looking for long positions on Nasdaq. But keep in mind that we have a huge imbalance in price. All right, we have a huge imbalance in price. We want price to essentially fill this over here. All right, fill this over here, but not only fill, also at least tap into our golden zone, which is also 50% of last week. All right, so the key long play, okay, for perfect long positions for me would essentially be price tapping into the support area over here, which is also our golden zone, having a stop loss at the base, which is a now support, and then aiming for something like this, if not higher. All right, if not higher. But remember, the only way that we can essentially identify our exit points and obstacles ahead is once we have more data. So that's why for Monday, I would stay out, see what price does. Is price going to slowly start coming down to fulfill that imbalance of price? And then there we can look for long positions. Or are we going to look for long positions being priced above, playing around last week's high and also above last week's 1.618 zone, right? To be very honest with you, I would be hesitant taking long positions above these zones without price fulfilling, without price fulfilling that imbalance, all right? Without price fulfilling that imbalance. So until then, I would probably look for short positions. Obviously depends what happens fundamentally with the market, all right? But like we've seen before, price doesn't have to fill that imbalance, all right? We've had situations prior where we've seen price have a huge gap in price, and it doesn't necessarily have to fulfill this week, next week, or the week after. Price can just continue going. So for us to get a possible good entry, right now, we need a little bit more data, right? The data that's presented right now isn't necessarily enough for me to work off of. The only possible entry that I could maybe see if price remains extremely bullish, right? So we have this huge imbalance. I'll just label this imbalance for now. All right. Is the closest entry that I could maybe look for is identifying here another imbalance. All right. So maybe price, FEG, maybe price coming down into this fair value gap, which also is our last week 1.618 zone. All right. So us being extremely bullish and only considering bullish momentum, all right, we could maybe see, let me just find this silly little arrow. All right, we could possibly see price coming over here, fulfilling that fair value gap and also retesting that 1.618, and then maybe touching that 2.618 zone. All right, but again, we need more obstacles. Probably the first exit would be the previous high, which is that. All right, but we need more obstacles for this traffic over here. So that's the kind of setup that you could look at if price is extremely bullish. And then in that scenario, right, the long position would most likely be something like this, having price slightly below there, and then that would be the first target, all right? And then second target would probably be the Fibonacci, the yes 1.618 on Monday, all right? So being today. So tomorrow would be the 1.618. All right, so maybe something like that. All right, but again, we need to see what happens today being Monday. I did label the perfect area where I would like to go for longs, but yeah, to be honest, we just need to see what happens today. Let price do its thing. If you guys are trading today, specifically Nasdaq, I would be very hesitant. Just be very cautious. The market is extremely bullish and looks like during York session it might only climb higher. All right, it might only climb higher. So we could maybe see last week 2.618 zone getting tapped at New York session. All right, getting tapped. For early entry, like I said, this fair value gap over here, also retest of last week's 1.618. That's potentially the only real early entry I would get. All right, but the best case scenario entry would be this one below. But we need some heavy stuff happening in the market for price to come all the way down there again. All right. So that's the recap. Hope you guys enjoyed the recap on Nasdaq. We did a recap on our trade idea for Friday, and also the play for this week, more specifically for Monday and Tuesday. Again, more so the play for this week, we will only really know depending on how price moves on Monday, right, being today. If you guys did enjoy this video, it is uploaded onto the YouTubes. Please comment below if you do enjoy it. Please like, please interact with it, just so that this video does well. And I'll see you guys on the Discord. If you guys come across this video and you guys aren't on the Discord, tap the links below. I try my best to stream every single day. If there's a good trade setup, I'll go live and I take the trade with you guys. So yeah, good luck with trading today. Hope you guys do well, and I'll see you guys tomorrow.